Hello, I am Dr. Jenna Woodland, Superintendent of Evergreen Park School District 124. As always, I am humbled and honored to be here to share in our story and success regarding the goals tied to our strategic plan. Today, we host our #WeConnect webinar series in which we make our goals come to life. Our initial goal is to really talk about how school finance assists us in getting to these goals. And today I have a very special guest by the name of Eric Grossi to really enhance our knowledge regarding school finance. At this time, I would like to introduce our Executive Director of Business Service, Mr. Eric Grossi.
Hi, my name is Eric Grossi, and this is my third year at Evergreen Park as the business manager. The business office, what we do is we run payroll, accounts payable, and benefits. I would say those are the three main functions of the business office.
Thank you, Eric. It is so great to see you today and to really interact on school finance. It is one of my favorite topics. And so I know that you have a variety of different experiences in the business office. So you've previously done payroll yourself. Is that correct?
Yeah, so when I first graduated from college, I was at Crete School District and accounts payable over there. And then actually I transitioned over to payroll and then had a year where I was both accounts payable and payroll. So I have a good amount of experience in each of the fields, which was very helpful.
Wonderful. Well, it is great to interact with you today. And I know that I have learned so much from you professionally and personally. And I look forward to engaging in our conversation today.
Some of the topics we'll be covering today are the current financial landscape of school districts in Illinois, the basic understanding of how your school district is funded, and improving your school district's return on investment.
Well, these are such exciting topics.
Yeah.
I can't wait to hear more.
So the current financial landscape of school districts in Illinois, most school districts are at their healthiest financial condition in decades. Districts are currently still trying to adjust to the post-COVID world. Inflation is at an all-time high, and in stark contrast to improving financial conditions in schools, the long-term financial condition of the state of Illinois is murky. The possibility of a swift and dramatic change in school funding should be on the radar. Districts are at their healthiest financial condition due to less spending during the pandemic and more federal funding through the ESSER grants. Also, the future financial condition of the state is always a question. There has been rumors of freezing property taxes or shifting pension costs to districts, and these rumors have been around for a long time. Even though these are just rumors, it is always smart to ensure that you have the necessary funds just in case one day something like that actually does happen.
Absolutely. And we also have a board policy, Eric, if I remember correctly, that really assists in state-based practices. So we're supposed to keep approximately 6 months in reserves. I like to say in case of a rainy day, in the event we don't receive either federal or state funding that we need, or sometimes even in Illinois, tax-related based dollars that really support us in being successful in educating our students.
Yeah, I think it's very important and safe to have that 6 months reserve. For example, last year, the state of Illinois was a little late with their tax payments. So as a result, there were some districts that had to borrow money to pay payroll. But since we had that balance, we were able to comfortably still run as a school district during these times.
Exactly, which is super important. It's
Right.
like, to me, it's like having a savings account, this extra cushion in the event we come into unexpected times.
Exactly.
Great.
The current financial condition for the state of Illinois. Illinoisans pay the 8th highest combined state and local tax rates in the nation. Illinois is the top outbound state for 10 years in a row. California was the second close. Illinois has the second worst in the nation pension debt, and Illinois has the lowest financial rating of any state in the nation. So this slide is more so just to point out, Illinois is truly undecided what's going to happen in the future of Illinois. So it's just very important while making these financial decisions for a school district. Also make sure, like we talked about on the last slide, to just have that safety net just in case something happens.
Yes, absolutely. Because there's definitely predictors that we can't really always foresee into our future. And we want to make sure that we're making the most fiscally responsible decision for both our taxpayer as well as for our students.
Absolutely. So this slide talks about how might the state's fiscal crisis play out legislatively. And I know I briefly touched up on this 2 slides ago. So 4 things are reduction in evidence-based funding dollars distributed through the formula, shifting pension costs to school districts, tax increase coupled with property tax freeze, or school consolidations. And like I said before, these are just reasons why it's just really important to have that fund balance of, board policy 6 months. It's just very important just to be safe in case something like this happens.
Okay, so I'm going to break this down with you, and I just want to make sure that I'm accurate.
Yes.
So we run on an evidence-based funding system, and that's how we get our money from where?
The state.
The state. And that's a predetermined formula to which they say, based on a variety of different factors, how we receive our money based on our student population.
Yes.
Okay, great. And I think you're going to go into that a little bit further.
Yes. So I'm about to talk about the differences with the state funding and local funding. So the state funding is evidence-based funding where, real estate taxes would be local. And
Awesome.
Knowing how your school district is funded is really important. Does your school district rely more on revenue from the state, or does it rely more on local revenue? Here's a breakdown of revenue sources from last school year for the state averages versus District 124, so ourselves. So if you see, the state average has a little bit more of a state funding percentage than we do, whereas we had more federal funding of percentage than the state does. Now, every single school district in Illinois has a different layout of this ratio, and it depends on certain situations. One example for us here, our federal was higher than the state average due to the fact that we did have this ESSER grant revenue come in. So as a total, the federal revenue made up a higher percentage. I do see that going down next year, though, as a result of the ESSER money coming off the books. So then I would see as a result, the local and state funding percentage would go up a little bit.
That makes so much sense. And just remind me again, ESSER was a federal grant?
Yes. So there was 3 rounds of the ESSER grants, and these were federal grants as a result of the pandemic. And they were brought out as a way for school districts to keep school running through these times, paying their staff, making sure that their students are safe during everything and fed and all those things.
Yeah, so it was definitely like a COVID relief, federal funding to support school districts during this very unprecedented time.
Mm-hmm.
Excellent.
The basic premise of evidence-based funding formula. When the state calculates evidence-based funding, one thing they look at is ratios based off of enrollment. You'll see some of these ratios on this slide, for example. And the more ratios you have aligned with the evidence-based formula, the closer you are to being fully adequate. Now, the word adequate is the word they like to use a lot in evidence-based funding. And you'll see on the next slide that that adequacy percentage is what we're looking for. And now you'll see there's a regionalization factor on there. And think of that more so as a regional inflation factor. So the regionalization factor, so the Cook County area would have a higher regionalization factor than Southern Illinois because the cost of living here is a little higher than the cost of living in Southern Illinois. So we would have a higher regionalization factor to bump up our evidence-based funding to have more of an accurate ratio with the cost of living in each area throughout the state.
That makes sense. And I believe you're also going to go into inflation later today.
Oh, yeah.
Okay, perfect.
So the prior slide shows some statistics looked at by the state to figure out the school district's adequacy percentage. You are then placed in one of these 4 buckets based off your adequacy percentage. 50% of the new money goes into bucket 1, which is tier 1. 49% of the money goes into buckets 1 and 2, which I know looks a little confusing, but it just goes back and forth with how much goes in each. But those are where those two buckets are where the 49% goes into. After that, only 0.9% of the new money goes into tier 3 and 0.1% of new money goes into tier 4. And by new money, what I'm talking about is every year when the state creates their new budget, every dollar amount higher than the prior year's evidence-based funding in the budget goes into this pool. And you'll notice on the bottom of this slide as well, it shows the 77% of adequacy target is estimated line between tiers 1 and tier 2. This changes year to year. Last year it was actually 73%. So we are actually, as a school district, at 76% adequate, which means last year we were a tier 2 school district, but actually this year we switched into a tier 1 school district. Now, financially speaking, since we're literally hovering right on the edge of those 2 tiers, there's really nothing worth noting other than that we're just in a different tier. It's not really going to affect our revenue that much just because we are at the exact same percent adequacy as we were the prior year.
Okay. And do you see any projections to which it can impact our funding long term, or we're not certain at this time?
I mean, if one day, for example, if we get healthy enough financially and we get into tier 3, tier 4, it's just the amount of revenue we receive as a state would bump down.
Okay.
It just every bucket you get into, as you can see, tier 1 has the most buckets. So I guess if we get, as a school district, our finances go down a little bit, which I'm not projecting that to happen, we would receive more revenue from the state to try to make up for that. But if we do get healthier, then we would go to a smaller tier 3 or tier 4, which would affect that the other way. But I think we're going to stick in the same area for a while. It kind of works by the region a little bit.
Makes sense. Thank you.
Mm-hmm. So now we're going to talk about inflation a little bit. Understanding how inflation affects your district. While expenses are impacted universally among schools, revenues vary significantly within the schools.
Yes. Like when I go to buy milk and I'm like, holy cow, why is milk so expensive? And I think all of us engaged in that over COVID times.
I know, just the price of things going up and down throughout the past few years is a result of inflation. And so tax caps, CPI history, 32 years. I have the 30-year average on here from the last 30 years. And if you notice, each of the 10-year gaps and the 30-year total average is right around 2.4%. So historically, inflation is about 2.4%. Now, I know that the state was really pushing for us to get close to that number this year. And as you'll notice on the right side of this slide, the new CPI number came out last week, and that number is at 3.4%. So, which is an improvement from the 5%, but the state is still working to get back to the average and hopefully maybe even a little bit lower than average if all things work out properly.
Yes. So you'll see, I'm seeing on this chart, Eric, in 2023 and 2024, we had historic CPI history, like an anomaly, with 2 back-to-back 5% CPI years. Is that correct?
Yes.
Which is just something that, to my knowledge, has never really occurred before.
Yeah, and the hope is that it's never going to occur again.
Mm-hmm. Absolutely.
Yeah. And this ties with our levy. So this means that next year, the most we could ask for is 3.4%, because a levy is 5% or inflation, whichever is higher. And this year, the 5%, or whichever is lower, I'm sorry. And this year, inflation for the first time in 3 years, including this one, will be lower.
Perfect.
The most important high-level financial decision to consider. So with your district's financial condition strong, should this be the once-in-a-generation opportunity to fundamentally improve your district's student learning environment, or is this the time to save financial reserves in order to prepare for possible fiscal challenges? I just thought this was a good statement, so I just put it on here. Just a good thinking point, really. There's not too much else for this one, but it just, what's the right answer? And there's really just a lot to look into.
Yeah, and I think you're going to go into aligning our fiscal responsibility to our goals and making sure that we do have clear alignment, which is the most important thing.
Absolutely. Effectively using your resources to improve student learning is so important. Changing the mindset around spending money in your school district is what I'll be talking about these next couple slides.
Perfect.
3 critical ways to improve student learning without exposing the district to financial challenges. One would be to reimagine the decision-making process. One would be to align programs within common goals. And the other would be to improve the return on district's most important asset, which is its staff.
Yes.
Reimagining the decision-making process. Current relationships between the budget and addressing student needs. Step 1, assess district's financial condition and resources. And then step 2, uses limited resources, current staff members, and current staff configuration to address needs of students, rather than buying something new to figure out something new. Use what you have first to see if that works and see if you can work with that and save money at the same time.
Yes.
The second part, where you must get to the budget discussion and decisions. Assess data, growing student needs and best practices, determine resources, staff quality, and systems necessary to improve student learning, and then do it. And then the key question to filter when doing budget decisions, and I think about this whenever I get asked, can we purchase this? Or, when I look at the budget and see, like, is this something that's important? I think, how will this impact student learning? And I just think that's my number one thing whenever it comes to an item to purchase. It's just how will this impact student learning? Because that's really what it's about. I mean, to be the most efficient as a school district with our spending is just to make sure that all our spending aligns directly with student learning.
That's wonderful. That's why we get along so well, Eric.
Yeah. So the next one is to align the district's programs to a common goal. As you'll see on this slide, the common goal is in the center, and you got a couple different programs within a district, and they're all pointing in different directions. It's supposed to symbolize we're not all going towards the common goal.
Mm-hmm.
The desired objective to maximize student learning per dollar spent. You'll see, so now we have everything going to the common goal. When you align all goals towards our strategic plan or common goal, the common goal, side note, is essentially our strategic plan.
Mm-hmm.
So when you align all goals towards our strategic plan, you will be more efficient as a school district with maximizing student learning per dollar spent. The last out of the three is to improve the return on the district's most important asset, which is its staff. It is important to ensure that your starting teacher salary and early steps are competitive to attract and retain quality teachers within your collective bargaining agreement. And it is also important to ensure that compensation levels and systems are in place to best ensure a robust and quality substitute teacher pool. Now, you notice I talked about 2 payments for salaries, and I think it's just because it's the most important to make sure you have people in the classroom that are going to be properly teaching and educating these students.
Absolutely. It's super important. I think we spend a lot of our time assessing our collective bargaining agreement, our salary schedule, making sure it's competitive and that we have fair and reasonable benefits, especially too for all of our teaching staff.
Right. We want people to look around and say, why would I not want to go here? You know, we want people to be attracted to come here. So those are very important things.
Yes.
Any questions?
All right, Eric. Well, that was a great summary of Finance 102. You definitely took a deeper dive.
Thank you.
You know, I'm just curious, like your perspective. Do you see like there will be a potential relief with CPI shifting lower for the taxpayer?
No, like property tax relief, you're saying, or?
Yeah, just property tax relief.
Yeah, I think that the property tax relief grant, which is a grant we were able to capture a few years ago, just one time, I could see that continuing throughout the state. Whether we qualify for that or not, that's another question. But we'll just have to find out once the state gives us a spreadsheet to show us, who's in what standing.
Perfect. And then, so now you've been here for 3 years. So over the course of your 3 years, what are you the most proud of in terms of our financial standing?
Yeah, absolutely. I kind of got into this business because I felt like this is something I'm good at, and I really wanted to make a change. And so coming in here with the financial state of the school district, I felt it was a good challenge for me to try to work towards, fixing that issue. And just through 2 years, being able to improve the fund balance by $10 million was honestly, like, I don't know if I could explain how that made me feel like inside. Like, it was just so cool to be able to have something like that happen. And just knowing that's directly impacting a whole areas like student learning and everything like that. I mean, that's what I'm in the business for. So that was a really cool moment for me.
Awesome.
Yeah.
I would also say too, most recently we actually have a board report too that Eric, I believe your work really contributed to our audit. And so our audit score has really risen drastically.
Mm-hmm.
It will be reported out in the very near future that our audit score is at a 3.9 out of 4.0, which is an excellent standing. So you want to talk about our audit really quick and what that means?
Yes, absolutely. So every year, it's law that every school district has to get audited for their finances from the prior school year. And the financial profile score is a score that they take a couple factors like cash on hand, revenues spent versus revenues versus expenditures for the year, how you're spending out of different funds. And it's almost like a report card GPA.
Love it.
And so going up to a 3.9 was very important for the school. 4.0 is the highest you could get, like a GPA. We were very close to a 4.0, let me just say. The days cash on hand, we're so close. So, the hope is this district could get into that 4.0 number, and just stay at that number in the future. And then in the eyes of the state, we'll be in a good financial standing.
Wonderful. Well, thank you, Eric, so much for your time today. As always, I learned so much from you about finance and Finance 102 and taking a deeper dive into inflation, evidence-based funding, state versus federal funding. And I'm so honored to be here with you today. And I just want to say thank you again for your time.
Yes, absolutely. Thanks for having me. I appreciate it.
All right. For more information regarding our strategic plan or to see any of our previous recordings of our hashtag WeConnect, please visit our website at d124.org. Thank you so much.